Was really good. Was really good. We back at it again. Apologize for no video last week. I was really busy. But yeah, if you're not in the Discord or if you're not on the Instagram, then you wouldn't know, obviously. But I transitioned to options trading. I've been trading options for like the past month. Been really great just because it's more within my playing style. I like to capitalize off small moves and quick moves, so it suits my purpose essentially. Also, I just like how it works and how it looks, especially with the more in detail analysis that you actually have to do to a certain extent. But essentially, on this video, I'm just going to be going over a couple of aspects, even showing trade examples for myself and students who've even used this, et cetera, within a handful of the stocks that I actually do trade. From SPY to NVIDIA. And yeah, just go over some things that I've learned, how this little strategy and these little techniques work, how to utilize them, how to capitalize off of them, and what you actually genuinely need to pay attention to and be fully aware of. Otherwise, you'll miss a whole lot of opportunities within this strategy, which is based off of gaps, which I'll explain in just a second. Before I do start, it's just not mine. I learned this from a trader. He goes by the name of RP Profits, or RP period Profits, like the little dot, which I'll put his Instagram and his YouTube in my bio. Great videos, cool dude. But yeah, let's get straight to it. All right, so what are gaps? Gaps are essentially the area between the previous day close and the previous day open. Obviously, if you look at stocks or you trade stocks, whatever, you know that the stock market closes at whatever time it is for you and then opens at whatever time it is for you, meaning it's going to leave a gap, as we can see here. Now, how do we mark out these gaps? You want to mark it on the close of the previous day and the open of the current day. So if today was Friday, this means Thursday, its last candle before market close was here. And then on the current day, market opened here. Now, if you don't already know, bullish candles open at the bottom and close at the top because it opens below so it could push up and close above. And then bearish candles open at the top and close at the bottom because it got to open above to sink down, obviously. Yeah. Now, what are these gaps other than just the little zone that you mark out within the close and the open of the previous and current day? They are areas with a lot of orders, and yeah, that's really kind of it. Liquidity as well, usually above and below within those areas, especially when it comes to market open highs and lows, which are also big liquidity areas as well. A lot of those orders are going to be within the top and the bottom of the gaps, which I'll show some examples of price literally on the money, tapping directly on the top and the bottom of these borders, and some more examples of it stemming a little past and then pushing in whatever direction that you expect it to go into. All right. So now that we know what gaps are, how to chart out the gaps, what to look for, where are the close and opens of certain types of candles, and et cetera, some more terminology is going to be gap ups, gap downs, and gap fills. Now, what is a gap up? Essentially, market is within a gap and it's looking to seek the top of the gap. So let's say we were consolidating within the gap here and it's pushing upwards. We're expecting it to go up to the top of the gap, and vice versa. If we're consolidating within here, we expect it to go to the bottom of the gap. It's going to be a gap down. And then gap fill is essentially market is not in a gap, but is looking to fill in the gap. So like here, to whichever part of the gap, whether it's top, bottom, or in the middle, like here-ish. And yeah, how do we trade these gaps? I've had a lot of trade examples within my own self and just looking at previous history. Not only does price like to tap directly on the top and the bottom of these gaps, or maybe stem a little past it, depending on if there's even more liquidity within the area above it or not. But it also likes to stem down to about 25% to maybe even 50-ish% within the gap before it starts pushing upwards. So how do we trade that? Not knowing if it's going to react immediately off the line or go a little bit within the gap is overall reaction. Trading, we already know, is not strictly, but a lot of trading is just reaction. All right. If you don't know how to react to price, if you don't know what you are looking for and what you need to look for within the candles and how price is actually moving, you're going to miss out on a lot of opportunities within trading, period. And in trading gaps, whether you're doing options or whatever, well, just stocks really, period. Trading those gaps, you really need to learn how to react to price, pay attention to price, and be aware of what it's doing and what it's going to do. All right. So we're going to start further back with some previous examples and then move towards current day. Moving back to previous history, this is the 2nd of August. All right. So as you can see here, market opened there, pushed down and closed there, obviously, and then market closed above here. It's a bullish candle, that's a bearish candle. All right. Price then came back and went directly into the zone, started wicking it, showing some more sell side pressure. It didn't tap directly on the line, but it went a little bit in the zone. And this is what I mean by you have to react. If you see it, if it doesn't land directly on the line and you're just like, oh, it didn't land directly on the border at the bottom of the gap, so obviously it's not going to work, you would have missed this big sell side opportunity, which was a 1 to 3, almost 1 to 4 RR. In this case, as we can see here, price stemmed a little bit within the gap and then came crashing back down. Now, where I have this placed at, the zone, is an area where I could expect that I would get into, because this is within the area where the candles really start showing more of its sell side pressure and the sell side momentum, giving you more sell side bias, especially after going within the gap and knowing how price can react to that. And getting in right there would have been just under a 1 to 4 RR, or maybe even a 1 to 4 if you got it a little bit earlier, because this was the candle right here was a really big bearish candle for a wick, for the body came up a little bit. And as we can see here, came crashing all the way down. All right. And if you don't know how to react to these candles prominently and see overall what it wants to do genuinely, especially in areas where it looks like it wants to buy, it looks like it should be buying, but it keeps on selling. If you aren't aware of what price is doing within the area and you don't know how to react to price itself, then you're going to miss out on a lot of these opportunities trading gaps. So in this case, if you know how to react to price, you know what you're looking for, you're aware of the momentum and the pressure within the candles to a certain direction, then you could have took this trade right here, essentially. This right here is one of my favorite examples, because I actually almost got stopped out, not within this market, but essentially did a very similar thing within a different market, within this huge sink downwards. But as you can see here, this candle tapped directly on the line, and then guess what? Boom, bearish candle right there, low medium size, came back up again, crashed down, long wick, small body to the top. And then gave you another little body in the middle, smallish wicks above. We are looking at a ton of sell side bias, because we see that sell side pressure within that medium sized bearish candle, price getting pushed all the way down to the bottom of the wick within the next candle, and then that little indecisiveness candle right before the big sink down. So getting in within there between maybe like the bottom wick of that little doji-ish candle to about midway of that medium-sized bearish candle, boom, you could have caught that entire candle just like that. I would have just took that entire candle. So I would have probably, around there. And that is a 1 to 5 RR. Moving up to here, this is a trade that I actually took in SPY, because I was aware of the fact that, well, price is continuing upwards within the gap, and it's looking like it's going to seek the top of the gap, so gap up. And then guess what? Came crashing down, but I was trying to hold this trade for a lot longer than I should have, especially being up 50% straight off the rip and then being up 50% again, just because the delta was fluctuating a little bit, especially when it started consolidating. But ultimately, I was trying to hold it for way too longer than I should have, and then it came back up, stopped us out. Here's my camera real quick, but essentially, as you can see here, price went directly on the line. Originally, it already showed sell side pressure tapping directly on the line, but it extended past it a little bit, probably just to sweep some more liquidity above that area, and then came crashing down with some big bearish candles, little consolidations to the sell side, came back up a little bit, and then sank all the way down again. This is the trade that I should have took in terms of, because my entry was absolutely beautiful, because I entered right there, which I'll actually put it up right here. But I just should have, got out at least at the end of this bearish candle, because this is when I got back to my 50% profit gain. Delta was real good with this trade, I ain't gonna lie. As you can see, price came up a little bit, went back into the zone, started showing some wicks and that buy side pressure within this candle. I probably would have got in once it gave me a little color switch, probably around here. And then boom, you could have took it all the way up to maybe here-ish before it started giving you that really big bearish candle. All right, stop loss, obviously, right there. 1 to 2 RR, just like that. 10 minutes, a little less than 10 minutes, depending on exactly when you get into the trade. And boom, just like that, 1 to 2. Risking $1,000 to get $2,000, just like that. All right. And then guess what? It came back down again, not only sweeping liquidity within that area of all those people who entered into that position and maybe tried to hold it even further up or never got out of that. And guess what? It wicked that as well. The body closed above the overall liquidic level. And then guess what? Pushed all the way up. All right. Me personally, I probably would have got out around here-ish. So 1 to 6 RR. But the furthest, because obviously you can see they start pulling back a little bit. But let's say you tried to hold it even further up, you know, right around there. So that's a 1 to 7 RR. That's a really, really big trade. And that's overall just because you are aware that when price came back down, not only did it sweep liquidity, but it even showed more buy side pressure after going within the gap. And then boom, you capitalized off that move significantly. A 1 to 7 RR. You risked $1,000 to win $7,000 just like that. And then right here, a little mini gap. This is another example. This is what I mean by price going into the gap some more than other than tapping directly or stemming past a little bit on the bottom or the top of the gaps, but going more midway before pushing upwards and needing to know how to actually be aware of what price is doing and react prominently to that. So then you can take beautiful trades and capitalize off of more moves than what you might miss out on. And essentially, when price came midway, you could tell by the wicks and overall the color switch within this big bear bullish candle. Probably would have got in probably about midway, just seeing, probably a little earlier, just seeing how long that wick is and seeing that it pushed all the way up just like that. You feel what I'm saying? Make that a 1, 2, 3 RR. Boom. Because I'm aware of, one, it went into the gap. We already know that the gaps bring a lot of volatility just because of all the orders within the area. Not only that, it also swept the market open low within this area. Again, be aware of everything in the surrounding. Not only did it come back within the gap, retested it, and then obviously rejected it prominently, but it also swept the market open low. That's tons of liquidity. And then seeing the color switch within the candle, boom, I'm in that. Let's say you missed out on getting in here. Guess what? It came back and retested again within that doji candle. And look at that buy side pressure, that long wick and that small body to the top. Man, in that. I'm at least in that around the top of the gap area at the line within that candle. And then boom, hold that to the fullest extent until it starts showing you some, it's looking a little iffy. So maybe even right there, boom, 1 to 3 RR, just like that. And then guess what? You could have took a short position after seeing that big bearish candle, all that sell side pressure. Probably could have gotten about midway to a little earlier than midway. So maybe like 25 to 50% within there because you see that big bearish candle. And guess what? It continued. Or let's say you didn't even get in within this first candle. Let's say you got in within the second candle. All right. Still, boom, wait for that sell side pressure to kick in. Right about there is where you would have seen that if you were paying attention. And then boom, take it all the way to the bottom of the gap. That is a 1 to 6 RR just strictly off of that candle. All the way to the bottom of the gap. But guess what? Tapped directly in the money, stem past it very slightly. But boom, directly on the money, and you could have went long again all the way up to the full extent until it came back down one more time before overall pushing up some more. That's 3 trades that you could have took within a, let's see, 9:15 to 10:10. So that's 3 trades you could have took within an hour. That's 3 trades that are at a minimum of 1 to 3, that are between 1 to 3 to 1 to 6 RR that you could have took within an hour. You risked $1,000 to win $3,000 on 2 different trades, and then risked $1,000 to win $6,000 on the second trade. That's a lot of shmoney on. You feel what I'm saying? This is what I mean by you need to be aware of how price is actually reacting, especially if price doesn't tap directly on the top borders of the gaps and it goes more midway or a little bit within the gap. If you aren't aware of how price is reacting and what it genuinely wants to do after it does that, even if it looks like it's just going to melt through the gap, you need to be aware. And as you can see here, you could have capitalized off of 3 different moves just like that within an hour, less than an hour, like 55 minutes. All right. Moving to here, as you can see here, price came, it opened upwards and then gave you this big bearish candle. All right, then pushed up a little bit more right there, tapped directly to the top of the gap, wicked it right here, showing just overall tons of sell side pressure. Within this area, seeing all of that before it gave you that big old bearish extension, I'm already thinking this is going to seek the bottom of the gap. Looking at all that sell side pressure, I'm already aware of the fact that, okay, it's probably going to seek the bottom of the gap. And then guess what? That's exactly what it did. It swept the low of the previous day's candle and then just really consolidated. Depending on how early you got in, you could have took a trade from around here and then got out around, there-ish, but that's if you did capitalize off of that. Otherwise, you could have waited for the retest right here. Guess what? Sure, it did go a little bit more in the gap, but look at the wicks and look at the sell side pressure. Boom. You could have took a sell. You could have took a trade probably around there-ish, stop loss around there-ish, hold this to the furthest extent until you see, oh, this candle isn't going to have to do that anymore. Boom. 1 to 3 R, just like that. You could even make it maybe even a 1 to 4 R, depending on how early you get into it. Just seeing how the distance from that wick to the distance to the bottom wick and just seeing the size of that candle, you would have noticed and acknowledged the sell side pressure coming within it, probably about, a little earlier than that, make it like a 1 to 5 RR. All right. And then coming back to the last examples that we're going to show in SPY, as you can see here, price came up, came back down with that doji candle, all that buy side tapped directly in the money, a little past it, but barely. Pushed all the way up, showing all that buy side pressure, came down a little bit again, then obviously color switch, boom. You could have entered straight off of that. That's clearly was seeking the top of the gap. Boom. Just like that. All right. Then price was coming back down to retest. Only way you would have been able to acknowledge that, it wouldn't have been the biggest trade, wouldn't have been the best trade, which isn't the point. The point is to win the trade, to be profitable, to be consistent. But you could have even possibly, got in around here-ish, took a sell position towards this gap again. And as we can see here, retested it. Again, if you weren't paying attention, if you weren't able to react to price prominently, you weren't able to realize that, oh, this is showing tons of buy-side pressure and very long wicks, pushing price to the buy side. Let's get in. And then, boom, you could have got in, bam, just like that. All right. All right, going to QQ now. Again, same thing. Price came down, went about midway in the gap. So you probably would have thought, oh, this isn't going to work. This isn't going to work. But guess what? Buy side pressure, long wick, small buy to the top. You could have easily got in probably about midway within that wick just because look at the distance and look at where it pushed up. You would have seen the volatility within that candle. And then boom, just like that, take it to the little supply zone right there. As we can see here, had tons of reactions and it sank all the way back down. Right here, again, another example. Price clearly was looking to seek the bottom of the gap. Therefore, we're going to capitalize off of that move and take it to the bottom of the gap. 1 to 2, almost 1 to 3 RR. And boom, came back, retested it just like that. You would have, if you were paying attention, you would have saw the sell side pressure probably around more like here-ish. And then boom, you could have took that to the furthest extent. 1 to 6 RR, just like that off the retest. But as you can see here, long wick showed that buy side pressure. Could have gotten at least midway, went all the way to the top of the gap as it was seeking out. Boom. Not only did it sweep the market open high within that area, probably some other old liquidity, and then came crashing down, clearly looking for the bottom of the gap at that point, which then once you see that sell side pressure, which look at the wick based off the entry, you would have noticed that volatility within that candle if you were paying attention. Boom, take it all the way to the bottom of the gap, and guess what? It tapped directly on the money right there. All right. Right there within that doji candle, wicked up. Unless you got in super early, only way you could have capitalized off of this little pullback right here is if you got in around like at the low there and then held it all the way up there. Probably would have been maybe like a 1 to 2 R, possibly, depending on how tight your stop loss is. But you could even capitalize off of that. And then guess what? Came down, retested. Once you see that sell side pressure, you enter into it. In this case, it also retested off a little gap right there and then extended even more down. Hold on, I'm going to pause the video real quick because this is an example that I didn't show. This is when Apple, this is a trade that I took on Wednesday. Tapped directly into the gap that was formed that day, directly on the line right there, and then pushed all the way up, which I put the example right here. And yeah, enjoy the rest of the video. To the last one, which is NVIDIA. Again, price clearly was seeking the bottom of the gap. Therefore, we're going to capitalize off that move once we see that sell side pressure, giving us more bias to enter into this trade, giving us more confluence and more confidence to take this position. Boom, we take it to the bottom of the gap. All right, unless you got in super early and expected it to react really strong off of that gap, off of the bottom of the gap, You could have possibly capitalized just strictly off of that big bullish candle to the top of that doji candle. All right, let's say you don't acknowledge that. Boom, came back, retested, a little steeper in the zone, but once you see that sell side pressure, boom, and it's exactly one of the trades that one of my students took. I ain't even have to signal it, which I'll put it up right here, and right here. All right, not only do we have the gap, but it was clearly seeking the gap right here. This is what we would call the gap fill. It's clearly trying to seek the gap above and fill that in. We did get, I'll put the signal in the trade right here. But yeah, essentially it inversed the gap, showed the respect with the long wick and all that buy side pressure. So I got in, took it to there about 33%, even from that small distance, but still great trade. Obviously, we acknowledge that price was clearly trying to push upwards to the top of that gap. And guess what? It tapped directly on the gap, directly on it. Rejected strongly. I even noticed myself in that trade that I noticed that sell side volatility about midway. Could have easily got in midway and took it to the bottom of this candle right here. Or when it came back up to retest it again, wicked it again, sell side pressure, could have took it all the way down here. And then guess what? Retested it, long wick, small buy to the top. That shows that strong rejection. Even though it looks like it's in the middle of nowhere, it's within the gap. You got to pay attention and react prominently. And it pushed all the way back up. You could have caught that as well. Yeah, so trading options has been absolutely beautiful. I love it. I love the analysis. I love the look of everything. Again, the gap strategy I learned from the trader called RP Profits. His YouTube and Instagram will be in the bio. You can even watch his video about it, et cetera, et cetera. But yeah, it works. Love it. Beautiful. But yeah, finish out the week for myself with a 90% win rate. Love it. All glory to God. And then Discord with another 80% win rate, because we had an 80% win rate last week, starting off the new month for Discord and myself. Yeah. You can like, subscribe, go to the gram, mentorship. Still got my 2 free sessions within there. Just use that. You ain't even got to go any further. Just use those 2 free sessions. Why not? There is no risk within that. But yeah, God bless y'all, and I will see y'all next time.